So, I mean, again, pros and cons because the traditional long-term care typically pays for more but then
Hello, welcome back to Making Money Manageable with Alan Dembski and Juliana Janson from Buffalo First Wealth Management. Today, we're going to be discussing 4 ways to pay for long term care if that ever comes up in your household. For many people, it's more of a likelihood that it will than it won't, but maybe 4 different options will help you start planning going forward.
yeah, and just first of all, looking at the statistics, the most recent statistics that we found, if you're a male over 65 or over, you have a little less than 50% chance of requiring paid long-term care, which is either in-home or assisted living or nursing home care. If you're a female, then it's more than a 50% chance that you will require this type of paid long-term care, which is pretty eye-opening.
Absolutely. And with statistics like this and combined with the news of long term care facilities closing or getting purchased by private equity companies, uh, people have a lot of questions on how am I going to pay for long term care and what are my options going forward.
Yeah, and you bring up a good point too with facilities closing. What you can kind of figure is down the line, there is going to be more competition, if you will, for the good facilities. And that's some of what we hear our clients talking to us about is, if I do need to have long-term care, I want to make sure I'm going to a good place. So the first way
Mhm.
to fund that is to self-fund, which basically means you're saving up the money and you're paying for it out of pocket, essentially. Which, if you have the funds, then it's definitely a good option. A couple of things to think about is, unfortunately, we don't know, none of us knows how long we'll be in this type of facility.
Right.
And, typically they say the average stay is around the 2 year mark, but it certainly can be more and it certainly can be less. So you might be either over saving or under saving because you don't really know how long you're going to need it. So, the pros are if you have the savings, you have the ability to pick a good place. The cons are you might miss out on some other spending that you could do prior to needing the long-term care.
And no matter where you're watching in different parts of the country, the cost is different. So
Absolutely.
here in Western New York, where we're taping this from, your cost is anywhere from $9,000 to $11,000 a month for long-term care,
Or more.
or more, depending on again, the facility and things like that. But that's the average in Western New York. The 8 counties of Western New York is 9 to 11,000. So just on the long term care side, you need about 120, $30,000 a year to pay for long term care. So if you're planning out, plan for 3 years at minimum. So you're what, 360,000 plus. Generally, people need assisted living or home care before they even go into a facility. So you're probably looking at self funding about a $500,000
Per person.
per
If
person.
it's if
Yeah,
it's a couple.
for long term care. But there are ways to hedge that too, other than self funding. You can buy insurance, which is always an option. There are a few long term care insurance carriers still out there. So your traditional long term care, you buy a policy. If it's a husband and wife, you generally get a little bit of a discount for married couples. If you're single, generally women cost more than men when it comes to insuring because they're more likely, based on the statistics you just said, of using the policy for themselves. Um, so traditional long-term care pays a daily benefit for when you're in a facility, as long as you qualify underneath your 2 ADLs, your activities of daily living. There's 6 total. If you have 2 or even a cognitive, will trigger the policy. However, the policy, depending on when you took it out, do you have inflation? Do you not have inflation? May not be enough to cover that daily facility cost with that policy, that you're going to have to self fund a little bit, anyways. So, the third way to do this is with the life insurance product, you have a couple different scenarios that could play out with that product. One, it will build a little cash value generally. Two, if you don't use long term care, we're not going to be here forever. So the life insurance benefit will be paid out. If you're still living and need long-term care, then you access the life insurance and then the rider of that policy anyways.
Yeah. So, I mean, again, pros and cons because the traditional long-term care typically pays for more pro, but then the con is that you're paying for the rest of your life. But the pros of the hybrid, it's not going to cover as much, but it's often finite and you don't have to pay for it for the rest of your life. And then there's a death benefit if you don't end up using any of the long-term
Right.
care.
And,
So
and that's the biggest hang up with traditional long-term care. Well, what if I don't need it? What if I'm in that 20 or 30% that don't need it? And then it's just like any insurance, you're paying into it and never have to use it. But with the hybrid, there's always a chance. Well, there's a chance you're going to use it either way.
yeah, right. That's one good thing about the hybrid,
Right.
actually. And then the fourth way to fund is basically Medicaid funding. And you probably see a lot of commercials. There are a lot of attorneys that have their entire practice built on trying to maximize the amount that you pass on to your heirs so that you can take advantage of the Medicaid funding. Again, that's a pro because there are ways that you can protect your assets for your heirs.
Mm-hmm.
But one of the cons of relying on Medicaid funding is you have less choice in terms of the facility that you're going into. Not every facility and not every type of care is paid for by Medicaid. So you're basically reducing your choice if you utilize the Medicaid funding option.
Yeah, and generally here in New York, not every facility has a lot of Medicaid available beds. So you could be put on a waiting list if you're having Medicaid pay for it. If you've given away all your assets outside that 5 years, there's a lot of cons to doing that. But if you structure things right, you can still have some self funding before you go on Medicaid, where the facility can't just kick you out. However, they can transport you to a different facility that has a Medicaid bed available. And generally, when there is no money available, the care may not be the best either.
So, a lot of different choices, pros and cons to each. One of the other questions that we get often is, when should I start thinking about securing this type of insurance?
Yeah, I usually think, you could probably Google this and get a different answer, but you're generally the 50s, I would say, is probably the best time. One, you're usually in good health in your 50s, maybe even later 40s, but 50s, you're pretty good health. Where once you start hitting 60 and 60 plus, maybe you have some high blood pressure medication, things start to change. But I would say mid 50s premiums are still reasonable and affordable. And then like Juliana said, if you're doing a product that has like a 10 pay, by the time you retire, that product will be paid off and you won't have an extra expense for paying.
Yeah. And the other thing that is sort of adjacent to this topic that a lot of times people don't think about is when you're going through this type of planning, you want to identify who is going to help you coordinate this. Even if you have traditional long-term care, there is some coordination that's needed by someone. And particularly if there are cognitive issues, you want to make sure that you have somebody lined up and give some good thought to identifying somebody who really understands you, understands your wishes, understands your likes and dislikes, and can advocate for you with the insurance company and with the facility that you end up going to.
Yeah, we talked about it earlier too, is, when you have kids, generally you'll name your kids as somebody and they'll step up and
But
help
not
you,
always.
but not always. However, when you're single and don't have any children, who's the next person in line is to think about that stuff before the emergency happens.
So that kind of wraps up our 4 ways to handle long-term care. We always like to hear from you. So if you have a technique or a tip that worked for you, please reach out to us and let us know. We'd love to hear from you.
Make sure you like and share our content for more.